Bitcoin has crossed the $80,000 level. In the market, these large round numbers act as psychological triggers that signal a return of broad risk appetite across the globe. Institutional participation through ETFs is now a primary driver of this momentum, creating a sentiment boost for the entire crypto ecosystem, from mining firms to digital exchanges. But a price crossing a line is not a confirmed breakout. If buyers fail to support the move with volume, the price stalls and reverses, creating a fake breakout that traps those who entered late. Many traders react to the headline alone. Without looking at the underlying price action, they risk buying at the top of a psychological spike. While the retail market focuses on the $80,000 milestone, a multi-billion-dollar structural shift is taking place that has nothing to do with daily price charts. Smart money is shifting focus away from volatile exchanges and toward the boring, expensive infrastructure that runs the world's financial markets. Bullish, a crypto-focused firm, has announced a $4.2 billion deal to acquire Equiniti, one of the world's leading transfer agents and shareholder service providers. Equiniti is an established corporate management firm. By acquiring them, Bullish is spending billions to control the highly regulated systems that manage ownership for thousands of global companies. This acquisition suggests that the largest players in crypto are no longer trying to build a separate system. They are purchasing the existing machinery of Wall Street. Managing the ownership of global corporations requires a massive amount of record-keeping to ensure that every share and dividend is accounted for. That is the role of the transfer agent. They are the official record keepers, responsible for tracking who owns a company's stock and managing the payments and corporate actions that follow. The current system is full of friction. A single trade has to move through multiple intermediary checkpoints, resulting in slow settlement times and restricted trading hours. Equiniti already holds the trust and the institutional licenses to manage these records. For a crypto firm, this provides a regulated entry point into the heart of traditional finance. By taking control of a transfer agent, a company gains the ability to change how stock ownership is tracked and settled on a global scale. Tokenized securities are the digital mechanism that could replace these manual record-keeping processes. Tokenization takes a real-world asset, like a company share, and represents it as a digital token on a blockchain ledger. This allows assets to move instantly between owners 24/7, bypassing the web of intermediaries that slows down the traditional market. This is not about turning every stock into a speculative crypto coin. It is simply a shift in how the ownership ledger is managed and updated. This deal gives Bullish the opportunity to test blockchain-based settlement using the existing shareholder records of a major institutional player. The $80,000 Bitcoin breakout provides the market sentiment, while the Bullish Equiniti deal provides the physical infrastructure for a multi-year shift in how markets operate. However, these digital assets must still fit within strict legal frameworks. Regulations regarding custody, security, and investor protection remain significant hurdles. Investors must also consider timeline risk. While the market may react to the news of this deal today, the actual integration of these systems will likely take several years to show results. And because crypto remains a high volatility market, traders must use careful position sizing to survive sudden swings in price. Even with this technological progress, the immediate path is filled with regulatory uncertainty and the risk of speculative traps. For long-term participants, the focus should shift away from daily price charts and toward the firms building the next generation of financial infrastructure. The advantage will likely go to those who identify companies successfully integrating blockchain tech to lower settlement costs and improve market transparency. Blockchain is evolving into a tool for resolving settlement delays and reducing the friction of managing global asset records. Pay attention to the loud Bitcoin headlines to understand sentiment, but follow the quiet moves in market infrastructure to see the actual future of the stock market.